Ladies and gentlemen, welcome to Only Trade to Win. Today we have a very exciting show. We are going to talk about semiconductors. Where are they traded? How are they traded? And what you can do to participate in the next gold rush that we're having in the Semiconductor Index. First of all, let's look at the Philadelphia Semiconductor Index. This is the oldest semiconductor index in the United States, was started back in December of 1993 and actually celebrated its 30th birthday last month. This index tracks 30 largest design, manufacture, distribution, and sales of semiconductor companies in the United States. And here is the picture of the index's performance since the day of inception back in 1993. In the last 30 years, the Philadelphia Semiconductor Index is up almost 1,800%. I went ahead and updated the numbers for last year. And as you can see down below under letter D, the Philadelphia Stock Exchange was up 70% last year. That's about 30% better than the Nasdaq did. Now, the Philadelphia Semiconductor Index is traded on the Philadelphia Stock Exchange, the oldest stock exchange in the United States of America. Now, let's talk about different options that we have to invest in this semiconductor gold rush. The Philadelphia Semiconductor Index is an index and it cannot be traded directly, but it can be traded through options and futures. However, we do not discuss options and futures on this channel because this is a channel for beginners who are starting to invest and trade equities. But this is one of the options that you can profit from. The second option that you have is by buying mutual or index funds. Now, mutual funds will have more of other stocks that are not related to the semiconductor index, but an index fund can have close to 100% of its holdings in semiconductor stocks. And the third way you can participate and invest in the semiconductor index is by investing into electronically traded funds or ETFs. An ETF is something that is passively mirrors an underlying index, and we are going to talk about different ETFs, but basically to understand what it is just something that passively follows the index. And in our case, it's the SOX. And the fourth way you can profit from the growth in the semiconductor index is actually by investing in individual semiconductor stocks. As always, I went ahead and I pulled up the top 7 from the Philadelphia Semiconductor Index stocks. And they are NVIDIA, Broadcom, Taiwan Semiconductor, AMD, Intel, Qualcomm, and Texas Instrument. Now, if you look at Intel, it is in red because it is losing money. And even though we spend a lot of time looking at pictures that are dating back 30 years, behind any move in the stock, there is always something fundamental. And in case of Intel, when the industry is doing so well and this huge company, old established company, is losing money, it's a huge red flag. Now, I went ahead and I filled out values of stocks last year, this year, and the percentage change. My next step is to go and figure out their earnings per share and revenue growth. And before we go there, down below, A1, A2, A3, these are my alternatives. These are my electronically traded funds that passively mirror the movement of the Philadelphia Semiconductor Index, the SOX. Now, by looking at rates of return on the individual stocks and the electronically traded funds, I think you can clearly see that the opportunity for exponential returns is obviously lies in stocks. Now, electronically traded funds, the attraction of that is that you get some kind of diversification. And now it's time for us to go and take a look at our alternatives, the electronically traded funds, and see what their performance was. Again, we start with the benchmark of what the electronically traded funds mirror, and that's the Philadelphia Semiconductor Index. I randomly picked the date December 1, 2017, and I see that in that date, the Philadelphia Semiconductor Index is up 683%. Then I go to my electronically traded fund. This is iShares Semiconductor, SOXX ticker symbol. And I see that for the same period of time, the iShares are up 592% versus the 683% for the Philadelphia Semiconductor Index, almost 100% more. Then I go and see how our next ETF. My next stop is to go and check our last ETF. This is SMH 1X Semiconductor ETF. And for the same period of time, VanEck Semiconductor ETF was up 637%. So when the SOX index was up 683, the iShares Semiconductor ETF SOXX was up 593%, and the Semiconductor VanEck SMH ETF was up 637%. I go to my spreadsheet and I mark what I found by color coding. Now we have one more ETF, SOXQ2, but I don't think it's even worth talking about it because this ETF was started back in June of 2021, and since it was the worst performer for last year, I am taking it off the list. So if I was making my choice, I would say SMH is the strongest one. I want to go with SMH. Same expense ratio as SOXX, but in the last 7 years, a term that I arbitrarily picked, it so happened that SMH was up 637%, while SOXX was up only 593. From now, I'm going to follow all three, but my interest is definitely A1. One interesting thing when analyzing this sheet, I noticed that Intel, the company that is losing money, is actually up 77% for the year. If we look at Intel, right now I ranked the Philly Semiconductor Index stocks by their net income. And as you can see, the first loser here is Micron and the second one is Intel. So while Intel Corporation is losing money, its stock went up about 80% last year. And that's one of the things that we always have to accept, that on Wall Street, sometimes future expectations are more important than today's profits. And when a company like Intel that loses billions can go up 80%, that tells you that anything is possible, and we really don't know the exact reasons why a stock goes up, even when it makes no sense, absolutely. And there are no fundamentals behind it, like in case of Intel losing $1.6 billion. So to recap, the Philadelphia Semiconductor Index is traded on the Philadelphia Stock Exchange, the oldest stock exchange in the United States of America. The index dates back to December 1st, 1993, and we saw there was up almost 2,000% in the last 30 years, especially those whose chips are in high demand from the artificial intelligence industry. Especially those that are in high demand, especially those companies whose chips are in high demand by the booming artificial intelligence industry. The first option we discussed was options and futures. Because the semiconductor index is an index, you cannot buy it directly, so you can participate in it by buying options and futures. Again, options and futures are beyond the scope of our channel because this is the beginner's channel. But again, this is a viable option, and the broker or advisor can definitely guide you through this option. The second option that we discussed was mutual or index funds. Again, we do not discuss specific mutual or index funds on this show, but what we mentioned was that if you buy a mutual fund, you'll have some semiconductor stocks mixed with other stocks. But if you buy an index fund that is trying to track or beat the semiconductor fund, you can have up to 100% of semiconductor funds in that index. Our number 3 option to invest in the booming semiconductor industry is via ETFs, and we looked specifically and found out that out of them all, SMH or VanEck Semiconductor ETF Index performed the closest to the Philadelphia Semiconductor Index, and therefore we decided that SMH could be the best option to go for us when choosing an ETF that tracks the Philadelphia Semiconductor Index. And our fourth and last option that we discussed was buying directly stocks that are in the semiconductor industry, and specifically stocks that are making chips for artificial intelligence industry. I selected 7 largest stocks from the 30 that are part of the semiconductor index, and I kind of made a spreadsheet. And I made a spreadsheet just to see how the stocks fared last year. And our champion, the stock that we've been following from below 500, waiting for quite a long time for it to break out, actually broke out and again is leading the pack. I started making this video 3 days ago. In just 3 days, it goes from almost $600 stock. Now it's gapping up at $620 in pre-market. So you see, we followed the stock all the way on its quest to break out of this 500 area. So it took a little bit longer than 4 months for this stock to go from when it touched the 500 area the first time to when it broke out. And the reason I'm showing this to you is because you need to be aware that sometimes this can be 4 months, this can be 10 months, this can be who knows what term period. But the fact that the price is not going anywhere does not mean that the move is over. So what I'll do from now moving forward is I'll fill out all the different information and I'll start playing with it to identify which stocks are strong and which stocks are dogs. One that we identified already, it would be Intel, because it is losing money. And investing is no charity, so this would be just for reference purposes, because it is a huge company and its chips are probably still in most laptops around the world. But somehow it is losing money. Now with Intel, if company cannot make money during good times, you will definitely not be able to make money during bad times. And because I have an extensive life experience going through hard times, I would really keep an eye on this stock and just beware. So here's the parting chart on how you can invest in the semiconductor indexes. I hope this was helpful. Navigate with care, and I will see you next time.